here at GLASS to be in touch with the material that IASB is publishing for public hearings. And for GLASS is our aim to comment on those projects, representing the opinion of the countries that are represented within GLASS. So it's always an important moment for the accountancy profession in our region to bring our view, our suggestions, our needs to IASB. I think this is the purpose of this process. So as such, we very welcome this outreach presentation. I think it will be a very fruitful momentum for us to comment. With us today, I can see in the screen Hernan Cassinelli is a member of GLASS representing Argentina and is the coordinator of this of our task force that we have within GLASS to comment on this project. So, and we have other professionals participating here, directors of GLASS, and other participants from the region. And I think more people will join us during the presentation. And so our expectation is quite good that we have a very important session. So welcome. The stage is yours.
Thank you very much, José. One thing just as you mentioned, to the task force representing many countries in the region, it's quite important to understand that when there is one country that does not agree with the other countries, it should not be a problem if we include, for example, in the comment letter, the position of this dissenting country or something like that. When you have mixed views in the region, definitely we would be surprised with all the time we have consensus. It is good that we have people with different views. The most important is that providing us with the arguments, examples, that the richer the letter, the better for us to understand and to make the necessary adjustments to our proposal. But again, thank you very much for the opportunity. The main point here is just to make a summarized presentation, as everybody's aware of the document already, and it's much more to listen to your questions, comments, and then provide feedback as well from our part. Thank you very much. And then I just hand the floor to I think Michelle or Carlo. You are on mute, Michelle.
Sorry. So I'm going to start off. So okay. First of all, I'd like to also express my thanks for the opportunity to come and talk to you today. And I should just mention the views that Carlo or I or Tadeu may express during today's meeting are our own views and not necessarily those of the board or the foundation. So as Tadeu said, we're in the final stages of the outreach phase of the comment period for this exposure draft. So I'll try and keep my presentation short because you've probably already had initial discussions. And then what we'll do is try and focus on the discussion and take any questions. And certainly on the topic that I'm going to discuss, it's without doubt been the most interesting subject and the subject that's had the most comments during the outreach phase. And we just finished a discussion with the ASAF members, which I think was quite a lively discussion. So if we move forward, and obviously that's what I've explained. What today is, we'll give you a quick overview of the exposure draft, and then we'll talk about this. So I'll talk about the objective and the scope of the project before I hand over to Carlo, who will talk about the disclosure requirements and how we developed those disclosure requirements. That's been quite an interesting discussion, and then how we laid out the standard. So if we start with the objective and scope, and this is the diagram that we've been using to try and illustrate the problem that the board was aiming to address. So the board took this project onto its research pipeline initially, following its 2015 agenda consultation. And what the board had heard during that agenda consultation was that subsidiaries would like to apply IFRS standards because they were reporting to their parent using IFRS standards. But when they came to do their own separate financial statements, it was a bit more challenging, because if they used IFRS standards, the disclosures in those standards were designed for public interest entities. So there was lots of disclosures for investors in there, things like earnings per share. But if they used the local GAAP financial statements, the problem was that the requirements in local financial statements might not be the same as the requirements in IFRS. And so then there was a need to keep additional accounting records. And quite often this was referred to as a bridge between the statutory pack that had been sent to the parent for consolidation and the local GAAP financial statements. So what the board did as a solution to this project was to come up with a way that the subsidiary could use that consolidation pack that it used, or that it was already using for its parents, for reporting to its parent, but then it could use reduced disclosures in its separate financial statements. So what the board is proposing is a draft IFRS standard that reduces the disclosure requirements a subsidiary is required to give in its separate financial statements. And this way the board felt that there would be, it could address some of the costs that were incurring. So if we move on, I can just explain some of the board's views on the cost. So we believe it will reduce the cost for preparers, because it's hoped that will be just one single set of accounting policies. So the fact that you might have different requirements between IFRS and your local financial statements, or your local GAAP, or the IFRS for SMEs would be removed. With having consistent accounting policies, you wouldn't have to maintain bridging records or additional records, and those two things in itself should reduce work for the finance team. And I think one of the things we've heard in consultation is that actually having one set of accounting policies and one framework for financial reporting does resolve a lot of training costs that can occur where you've got to learn two different forms of GAAP. But it's important that even when doing this, we made sure that the financial statements of those subsidiaries were still fit for purpose. So we spent a lot of time designing the disclosure requirements so that they were designed for non-publicly accountable entities, and they were tailored towards the users of those financial statements. Now, I know I said that we've had a lot of feedback on the scope of this project. However, what I would say is overall, we've had support for the board's objective, and we've had different views on how we should address scope, and some quite varied views. But I don't think those views were negative to the overall function of the project. So let me just run through what the board is proposing in terms of scope. So it would be a voluntary application standard. So a subsidiary would choose, it would do its own cost benefits analysis to see whether this standard helps them and helps them reduce costs. It would be available to any entity that was a subsidiary at the end of the reporting period. It would be a subsidiary that does not have public accountability, and I'll come back to that. And it would also have to have a parent that prepares consolidated financial statements available for public use. Now, that doesn't mean it has to be an immediate parent. or that it has to be an ultimate parent. It just means that somewhere there has to be IFRS consolidated financial statements available. And we'll look at some examples of those. Now, in terms of the definition of public accountability, which I said I would come back to, we borrowed that definition for the IFRS for SMEs. And basically what that standard says is you can apply the IFRS for SMEs if you don't have equity or debt instruments that are traded on a public market, or you're not holding assets in a fiduciary capacity. So equity and debt instruments traded on a public market is normally easy for you to establish, or the holding of fiduciary assets in a fiduciary capacity. We think most banks and most insurance companies would meet this requirement. So it's where you're holding monies and you have a duty to somebody else. Okay, so I can just run quickly through some of the scenarios about eligible subsidiaries. The first scenario is very simple. It's where we have a parent preparing consolidated IFRS standards and a subsidiary without public accountability. The subsidiary would be eligible to apply this, the draft standard. In the second scenario, we have a subsidiary that does not have public accountability, but it has a parent that prepares consolidated financial statements applying a local GAAP, so doesn't have compliant IFRS financial statements, wouldn't be eligible to apply the standard. And then finally, this is the point I made about the ultimate and intermediate parents. Subsidiary doesn't have public accountability. The ultimate parent doesn't prepare consolidated financial statements complying with IFRS, but actually there's an intermediate parent that does. Because there's an intermediate parent that does, it would be eligible. Now that's a really quick flip through the objective and scope of this project, and we just have some questions. We quite like to stop and take questions now before Carlo goes into his section, if that is okay with everybody.
Thank you, Michelle. José?
Yeah. If we have some comment at this moment, any member here would like to address some initial comment? It can be done even in Spanish. We can.
Could I make a comment?
Okay, Hernan, please.
Thank you. First of all, thank you to Michelle for the presentation, and to Tadeu and all the team for the opportunity to share with you the knowledge about the project. Our concern in the group about the scope of the project is related to the reality of our region and regulation in some of our countries, where regulators add different criteria to meet the definition of SMEs, and in those countries we can find entities that are standalone entities, are not part of a group, that are required to comply with IFRS standard in the financial statement. And on the other hand, we can find also companies that are part of a group that report their consolidated financial statement under IFRS standards. And we advertise that we are in face of similar entities, but with different options, because the rationale that we can find in the standard is that the usefulness of this disclosure scheme is based on the fact that the entity is an SME, not that the entity is a subsidiary. Those that make the difference between users is the fact that the entity is an SME, and in those cases that I have mentioned, the first SME that is not a subsidiary would not be able to apply the future IFRS standard, and the other would be able to apply. That is the first concern, and related to this first concern, we can conclude that in practice, we can maybe we will find entities that would apply this future standard without making a statement of this application, because since this entity that I take as an example has to make a materiality exercise to prepare their notes. If the notes for SMEs included in this project are the notes that the users of SMEs needs, de facto any SME subsidiary or other than are not subsidiary could conclude that applying this disclosure requirement result in a full compliance of IFRS standards, and de facto any SME that has to apply IFRS standard finally will use this future standard without a declaration of the compliance of this standard. That is
sorry, Hernan, it's a good point, and I think also that we have a situation where the legislation, local legislation, may require more information than the simplified disclosure requirement that will be set in this project. It can be, because we have different regulation in different countries now in the region. So in non-specific countries, we can have the need to provide more information than the standard will require. I think we discussed this point too, in the GTT, no?
Yes.
Mm-hmm.
Yes, we were discussing about this point, and also there is a significant reality in our region, that is that a lot of company report to parents that are located in the US, and in those countries the entities use GAAP, as you well know, and all these entities in some countries are in each country where the subsidiary is located, sometimes applies IFRS standard, and all these big number of subsidiaries that don't have parents applying IFRS standard in their consolidated financial statement will also be outside of the scope of the standard. But in our view, these subsidiaries could de facto finally applied this future standard. That's why we think in a preliminary view, because this is also the preliminary views of the technical working group. We think that why not to expand the scope of the project to all those entities that are SMEs and apply IFRS for SMEs, because I also hear, for example, in Argentina, maybe we don't have this problem because in our country, the only listed company are required to apply IFRS standard, and other companies apply local gaps, and all that the subsidiaries that are related to any company that apply IFRS standard in Argentina are a subsidiary of a group that apply IFRS standard in their financial statement. And some people, some of this enterprise tell me, and what about the additional record that we have to include in the reported package from our financial statement? Because if the idea is help to subsidiaries that are part of group that report under IFRS standard, we have a lot of record to include as adjustment in our package report to adopt the parent perspective or the group perspective, really. And why not to include the option of push down accounting for all these adjustments if the objective is reduce the cost of all the subsidiaries that are part of a group of IFRS standard consolidated financial statement. Well, this is our main concern. Some countries also are concerned about the difficult for the accountant to understand the difference between the different offers into the IFRS literature, because now we will find 3 stages of application of IFRS. On one hand, full IFRS with full disclosure. The second stage is full IFRS with reduced disclosure, and the third is entities that apply IFRS for SMEs that not in all countries are allowed to use. For example, in Mexico, IFRS for SMEs is not allowed to use by companies. That's why we think that the scope should be more flexible for consider the different situation in each country, and how as Jose told, consider the different regulation in each country that could move forward to adopt or not adopt this standard in order to the flexibility of the scope.
It's one point, no, because we also have in different countries the notion of a public accountability is related to the size of the entity too, because we can find subsidiaries that are big in that specific country, and they don't have a public accountability considering the points that you mentioned in the project, the conditions to fit within public accountability concept. So if you add the size of the company, there is a specific legislation which says that if you are below such amount of revenue or assets, you are not obliged to publish your accounts or any other disclosures. So I think would be interesting to consider such metric in this concept, considering the size of the subsidiary too.
I can pick up a couple of those points if that would help.
Right.
So I think the IFRS Foundation has always been clear that every jurisdiction has got to determine its own framework for financial reporting. And I think what we have seen over the years has been IFRS being applied by listed entities or entities that jurisdictions define as public interest entities, then something for the mid-sized companies, either IFRS for SMEs or local GAAP, and then something for the micro and very small entities. And I don't think this standard is proposing to change that framework that you have in place. I think that framework is your framework, and you would fit this standard into the framework. It's just it's something else that's in your toolkit to help with the financial reporting. I think we have heard some feedback about bringing in three. Well, it isn't three different gaps, because this standard would be part of IFRS standards. So this would be an IFRS standard. So the board would be offering IFRS and the IFRS for SMEs still. It's just in certain circumstances, the board is saying there is areas where we don't need all of those disclosures, and this should help the reporting. So I don't think there are three gaps. I think that keeping it to the subsidiaries, it addresses that point. I think the point that has been raised about comparability is addressed in the exposure draft. So when we were developing the standard, we were conscious that you could have, given that the standard would be optional, you could have two subsidiaries. One chooses to adopt the standard and one chooses not to apply it. And so therefore, there's a requirement that when you apply the standard, you disclose that you have applied the standard alongside your statement of compliance with IFRS. So that's how we've tried to address the overall compatibility problem. Carlo will talk to you about comparative information. In relation to additional local requirements, we see that with full IFRS, where there are additional disclosures required, even with full IFRS. And IFRS standards, if you make additional disclosures, you would still be in compliance with IFRS standards. So that, so I guess there's 2 points here. If there is something that is in your local standards that we've missed out, it would be good to know what that is in your comment letters, so that we could, make the standard more comprehensive if it needs to be. And vice versa, if you look at the disclosures in the standard and you feel there are areas we've got too many disclosures, that would be good to understand. But I don't think I think you could still be compliant with this standard and give additional disclosures that are required. And then finally, we have heard the point about an ultimate parent having to comply with the IFRS standards, whereas some ultimate parents comply with US GAAP. We took that requirement from IFRS 10, and I don't think we could change that requirement because it's a function of IFRS 10. Those were the major points I noted from your points. Tadeu, did you want to add anything?
I think and Hernan can correct me if I got it wrongly, but it's what probably, in other words, he was saying is that if we expand the scope, for example, to all SMEs, it would make it easier for each jurisdiction to decide within this SME universe those that would be allowed in their jurisdiction to apply. Because if we have this narrow scope, only subsidiaries, there isn't much room. It's basically this one. I mean, it's some. If someone, we had this discussion, Michelle. If someone wants to apply this standard for a public entity, for example, just to give a very extreme example, they will not be able to say that the financial statements are in accordance with IFRS because it doesn't meet the criteria in our standard. Definitely they can do that. But the other way, as you mentioned, you can remove an option and it's still compliant with IFRS. You can reduce the universe of companies that can apply the standard, you still comply with IFRS. You can add some disclosures, you still comply with IFRS. And then that's the way you can better incorporate the standard in each of the jurisdiction needs, if I can say that, not user needs only, but jurisdiction needs. That's, I think, that's the main point I think that Hernan was trying to say is definitely it will help the subsidiaries, but it could help more companies and could help the jurisdiction if I have a broader scope. I think that's what I have captured from his comment. I don't know now whether I'm correct on this.
Yes, Tadeu, you are correct, but only a little point. We didn't see that the future standard could create any problem to be adopted in jurisdictions of the region. We are concerned for the day after the adoption, when some companies notice that they are maybe smaller than those that are allowed to count with a small disclosure scheme of day, and it can create difficult for each jurisdiction to explain of those companies that they are smaller, but they are not the option to count with a simplified disclosure scheme, and other companies that are part of a big group that have more resources to comply with these requirements are allowed to comply with lower requirements of disclosure. At least into the group, we don't reach about problems for the adoption of the standard if the standard is issued as it was proposed. But we noticed that about the problem for the implementation of the standard once it was adopted in each jurisdiction for this difference, because in our understanding, any exercise of simplification should benefit to those entities that are lower resources than those other entities that are more resources. And in this scheme, this simplification benefits only to those companies that are more resources to comply with a big, with a huge requirements of disclosure of those that are less resources.
Yeah.
That is our concern.
It's a good point, Hernan. We will explore these more in the group and to prepare a comment describing our concerns on this. We have Bill Bees that is raising hand for comment. Is you there, Bill?
I'm still here. No, I was just going to say, we discussed this yesterday in the technical working group. And first, the argument is, and we looked and we read Francois' dissenting view, and we were sympathetic originally with that because I think she explained as well, or maybe better. Hernan, you were going along and repeating a lot of what she said, and it's very true. One of the arguments that she did not mention for not using, which is an alternative, the IRS for SMEs, is one, she did mention that you might be very large. And there are some SMEs in Mexico that sell billions of dollars a year. They're not by any stretch of the imagination really SMEs, but they're private entities. Secondly, she said because of the sophistication that is, they're entering into all kinds of transactions where the SME standard may not be adequate. And the third argument we came up with was pride. I hadn't thought of that. I'm not an SME. I would not use the SME standard because it's for little guys. It's not for me. So that's one argument she didn't put in there, but that's fine. But the bottom line is, it seems that if you are a large non-public entity in the region, you have two choices: apply full IFRS or apply local standards. What we have decided to do in Mexico is, within our standards, similar to US GAAP, we have separate disclosures, or we have additional disclosures if you're public. Not reduced disclosures if you're private, but additional disclosures if you're public. And so we in Mexico do not need this standard. We agree with it because it would not be applied in Mexico anyway. Our own local standards resolve the problem. And we think that's similar to what's happening, I think, in Argentina. If you're not flying full IFRS because you're not public, you apply local standards, and those standards presumably are for non-public entities and presumably do not have all of the additional disclosures. So I just wanted to add that there's a lot of sympathy for Francoise or the dissenting view in the proposed standard, but at the same time, we in Mexico believe that this is an appropriate approach. I think it works very well. Restricting it to subsidiaries keeps it within the IFRS pool. If not, you get into a situation, as Hernan was saying, it sounds like you have three gaps. No, there are not three gaps. There are two sets of standards: IFRS and local, or SME, excuse me, IFRS and SME. But there's not a third in the middle. So I think the proposal eliminates the idea that there might be a third set of standards. So we would support it. Thank you.
And I fear, Bill, that in Brazil, the situation would be different because we have subsidiaries without public accountability that in certain circumstances, they have extensive disclosures to be published, whereas if we could benefit of this pronouncement if we can have a reduced requirement. It's my first understanding of this discussion. But okay, I think we need to move on. And if we have anybody else to comment, please raise your hand or send a chat. We can open space. Otherwise, we can move on, Tadeu.
Thank you, Jose. I think that it now is with Carlos. Carlos, isn't you? We can't hear you. We can't hear you yet. We can see the slides, but not hear you.
Yeah.
No, we can't hear you.
I can hear him.
You can hear him?
No, I can't hear him.
Ah, you can't. Okay. No, in this case, I think that we maybe, like Boris Johnson did in the UK, we should go to Plan B.
Is Plan B that I present?
Yes.
All right. Okay.
Actually, it's the Plan B.
It's Plan M.
Hopefully, Hazira can hear me, and I'll have to present them. Right. So the first thing we're going to talk about is how we developed the disclosure requirements. So one of the key points, actually, if we move to the next slide, I find it easier to present the next slide. So what we did in developing the disclosure requirements was, the first thing the board said was, well, we've already got some disclosure requirements that are in the IFRS for SME standard, which the board has already gone through a process of reducing those disclosure requirements. So it said, rather than start from all of the IFRS standards, we should start from the IFRS for SMEs standard, and where the disclosure requirements are fit for purpose in the IFRS for SME standard, they would obviously be fit for purpose here. So there was no need, so in most cases we could use the disclosure requirements that are in the IFRS for SME standard. However, the problem is, in some instances, there are differences in the recognition and measurement requirements for IFRS standards and the IFRS for SME standard. And this comes about because sometimes the board puts in simpler options into the IFRS for SME standard, or because the IFRS for SME standard is only updated every 5 years and IFRS is updated regularly. So where we got to a position where there was a recognition and measurement difference between IFRS standards and the IFRS for SME standard, what we did was we went back to the IFRS for SME standard and borrowed the board's thinking in how it reduces disclosures in the IFRS for SME standard. So if we look at slide 14, when the board is designing disclosures for the IFRS for SME standard, it starts with full IFRS standards, but it says, what disclosures do we need for this group of users that are using SME financial statements? And it focuses on things, the 1, 2, 3, 4, 5 things that are on this slide. And this is this paragraph BC 157. So all of this is set out in the basis of conclusions to the IFRS for SME standard in what has become quite a famous paragraph, BC 157. So what the board looks at are the things that users of SME financial statements look at, and that's things like liquidity and solvency, short-term cash obligations, commitments, areas where management have had to make judgments, so areas where there's measurement uncertainty, areas where we have amounts need disaggregated, and accounting policy choices where there's accounting policy choices. Now, we are currently undertaking a review of the IFRS for SME standard, and what we did last year was we did go out to a number of SME users and say, do you think these things are right? These were the things the board thought about 10 years ago. Are they still your area of focus? And generally people said they were the areas of focus. So we could be quite content that we were using the right areas to reduce the disclosures. So what is proposed in the draft standard is a reduced disclosure requirements, which ultimately come from IFRS standards. It's just in some instances we short-circuited and used the board's thinking which was already in the IFRS for SME standard. In other circumstances, we had to go back to IFRS standards and then apply the board's thinking. It does mean when we come to do the next stage of the comprehensive review, we've got to look at the thinking and match it all together. So that's what the team are going to be doing in the first quarter of next year. So the board decided to propose reduced disclosure requirements for all IFRS standards except for IFRS 17 insurance contract. And that was principally, there were a number of reasons, but principally because IFRS 17 has a new model of accounting in it. And I think most of the board members felt that we should allow the disclosures to settle down, to allow that model to settle down, get some feedback before we started reducing the disclosures. Then IFRS 8 and IAS 33, those standards have scopes in them that would predominantly scope out entities or subsidiaries that were eligible to apply this standard. So we excluded them from the standard. But what we did say was, if a subsidiary chooses to disclose earnings per share, then it should apply IAS 33. And if an entity chooses to disclose information about operating segments, if it's not in compliant with IFRS 8, it must say that, or it must comply with IFRS 8. And we didn't put in any of the new disclosures that were in the exposure draft that was at that time still out for comment on general presentation and disclosure. Okay, so moving on. I'm not sure I remember what this slide is trying to, since I'm ad-libbing. I think this is just explaining the point that I explained that we used all the recognition presentation requirements for from IFRS standards, and then the draft standard is an IFRS standard, whereas we took the disclosure requirements from the IFRS from SME standard and moved them into IFRS standards, albeit we originally moved them out of IFRS standards. So we can move on to the questions that are on slide 17. So this says, do you agree with the approach that the board has used in developing the disclosure requirements? And do you agree that the proposals would maintain the usefulness of these financial statements to the users of those financial statements?
Okay, now open for questions. ¿Alguna cuestión?
Un comentario, José Luis.
Sí.
Thank you. Well, in the technical working group, we have prepared an analysis trying to identify those sections in the IFRS for SMEs that present differences on recognition and measurement requirements with IFRS standard, and we are not sure that our point of view is the same point of view of the IASB, and we want to know if there is any material during the discussion of the project where maybe the staff propose any document, any table with this point. For example, we take section 19, business combination, and the approach is similar to IFRS 3. They use the acquisition method for the business combination under the scope or into the scope of this section. Most of the requirements are aligned to the IFRS 3, but not aligned in a 10%. In this case, we consider that section 19 is not similar to IFRS 3 in measurement and recognition criteria, but we are not sure that this is a good point to consider, because this is the way that we are organizing the analysis of the requirements. We are comparing the requirements in the draft with the requirements in the IFRS for SMEs. We'll make an analysis about the percentage of which number of the section are totally aligned between IFRS for SMEs and the IFRS standard, and of those that are not aligned, if they are completely disaligned or if they are partial disaligned between both sets of standard. And we would it would be very useful for us know if you can count with any analysis about this point.
So IFRS section 19 is not aligned with IFRS 3 as it is now. So there is a paper, in fact, at this week's board meeting, which talks about updating the IFRS for SMEs to align with the current version of IFRS 3. So the standard is aligned with the version of IFRS 3 that was issued in 2004, but that was before the second phase of the business combinations project. So it's not aligned in a number of significant areas. Now, I think we are not, and the request for information did not suggest, it didn't seek views on aligning. We don't. It's a bit of a difficult one. There are bits of it, so we think we should align the cost so we get fair value of contingent consideration, but we don't think we would align some of the requirements to fair value intangible assets and things. So it is not aligned. It is really, really difficult, and it's something that we've heard in the IFRS for SMEs project, that we probably need at some stage to issue a more up-to-date list of where the IFRS for SMEs is aligned and where it is different from IFRS, because I think there was a list that was issued with the original IFRS for SMEs, but there wasn't a list after the second comprehensive review. So once we after the first comprehensive review, once we finish this review, we will do a list of where the alignment is. Now, I think, if I'm honest, the most difficult standard, what we did as staff was we downloaded all the disclosure requirements that were in the IFRS for SMEs, downloaded all of the disclosure requirements in each individual IFRS standard. We went to the modules that are available for the IFRS for SMEs, which do list out the differences between IFRS and IFRS for SMEs. And then we did a line by line comparison to get to the disclosure requirements. And then all of those disclosure requirements were reviewed by the board members after we as staff had put them together. And it was a massive amount of work, just a massive amount of number crunching work, comparing things line by line and analysing all the differences. I have to say IFRS 12 is difficult. I'm going to put my hand on my heart and say it's difficult because, you know, you've got a consolidation model that isn't aligned. You've got a joint venture model that isn't aligned. You've got investment entities that isn't aligned. And then you've got all the stuff around structured entities that was brought in via IFRS 12 that is not in the IFRS for SMEs. So we've tried in the basis, for instance, to explain what we did with investment entities. It was a really tough drafting. All I can offer is, if you've got specific things that you want to ask us as staff, we can probably go back to our working papers and give you the answers. So if you want to say, where the hell did you get this disclosure from? We can probably tell you what the equivalent is in IFRS if you can't find it in the IFRS for SMEs. I have a very bad marked up copy of the IFRS for SMEs, which is looking a bit worse for wear. So my suggestion would be, if there's something that you're looking at and you're thinking, what planet were these guys on? Just drop myself or Carlo or Hazira an email and we can probably quickly find you the answer in our working schedules.
Thank you.
It goes to, let's say, to a discussion that it's behind it. And when you look into the disclosure draft, you have a very extensive number of disclosure requirements that was selected to require for such subsidiaries. It would be an important moment for IASB to consider judgment or what is relevant for such kind of entity. Why not being more based on those qualitative concepts instead of prescriptive requirements? It's a point. And because for the full IFRS, we already have all the state-of-art requirements for disclosures. So if we are reducing the requirements for more simple entities, simplified entities? Why not giving to the preparer the opportunity to select what is relevant to the entity?
Well, I'm sure Tadeu is going to want to talk here, because
comment,
I think
I could not
Tadeu set you up
resist
to
to
say
make
this.
it.
I think Tadeu set you up to say this because this is Tadeu's opinion. I don't know. I don't know the answer to that, because what we hear is that SMEs just like to make the disclosures, and they have a preference for the checklist approach as opposed to the more, what is the objective of this disclosure? So I mean, one could say, let's say that the targeted standards level review project turns into a standard, and in 20 years or 10 years time we've reviewed all of the IFRS disclosures and we've just got a bunch of objectives. Today I would argue, well, then you don't need this standard. I'm less convinced than he is, but he won't be upset by me saying that, because he normally says Michelle disagrees with me here. So
Right. Yeah.
I think that it's a long discussion, Jose. I think one thing that I can, because I hear all the time that the IFRS for SME is too complex for SMEs, it's too long for SMEs, and I always will answer back to say that I really don't agree with that. I mean that if an SME, they have simple transactions, it would have a simple accounting application, even if you apply IFRS for SMEs. But when I'm here now, especially from the request for information feedback, is that people just asking more guidance, people asking to include the guidance about a specific transaction, for example, and then it is exactly the opposite way. When people say that's it, at the same time that they believe that the shorter, for example, standard, they also would like more guidance, and then it's difficult to simply make all happy in this process. What I can tell you in my general view is that usually if the company is a small and medium entity with simple operations, usually it should not have a problem in applying the standards. They standard IFRS for SME, but it's not necessarily everybody's opinion. But I got your point. I like the project on disclosure requirements, but I think that there are, at the same time, people know that there are problems with financial statements, but they would like a more prescriptive. They don't want to get rid of the prescriptive list because they think that it brings some safe harbor when preparing financial statement. But anyway, it's another project. Let's focus on this one.
Hernan, you have a consideration?
Yes. While I hearing to Jose, I remember that some years ago the IASB published a guide for micro entities that apply the IFRS for SMEs. And what I will say, it's on my own, it was not discussed in the group, but I think that maybe other way to help entities that are SMEs that apply IFRS standards is not developing an IFRS standard, but issuing a statement of practice for SMEs that apply IFRS standard by analogy with this guide for micro entities that apply the IFRS for SME, giving some orientation to these entities that have to make a materiality exercise to identify which requirement of disclosure are relevant for each one and which not are relevant.
Okay. Tadeu, I return to you.
Yeah, no, I think that I don't know whether it is you, Michelle, or Carlo again. Carlo want to try or? Yeah, can see the slides.
Okay, I think it's going to be me, and I'll definitely be
Yeah.
ad-libbing on this section of the slides. So the standard comes in two parts, really. The first part, which we call the main body of the standard, sets out the objective and the scope both of which we've discussed. And then we set out how you apply this standard. So how you elect to apply the standard and how you revoke that election, because obviously with it being an optional standard, we needed to explain that. Then there's a discussion about the interaction with IFRS 1, because clearly, because as we were saying at the beginning, entities are coming from a number of places, i.e. they could be on the IFRS for SMEs, they could be doing local GAAP, they could be doing full IFRS, and they'll be moving to this standard. We needed to explain what interaction happens with IFRS 1 and the circumstances in which you need to go through IFRS 1 and the circumstances in which you don't. And then we set out all of the disclosure requirements that are required in the standard. What we did in the appendices was we explained the disclosure requirements that this standard replaces. So there's a list of all of the disclosure requirements that are in IFRS standards that you no longer have to provide. And then there are the obviously effective date transition, and then there are a few consequential amendments to one or two other standards just to clarify interaction with this standard. So how an entity would apply this standard is just illustrated in slide 20, because what an entity does is, for example, if it's got inventories, it applies IFRS 2 for its accounting policies for inventory, uses the recognition, the measurement, and the presentation requirements that are in IFRS 2. But then it doesn't apply, it goes to the draft standard, doesn't apply the disclosure requirements in IFRS 2, but applies the disclosure requirements that are in the draft standard. Now, there are one or two circumstances where we decided to leave the disclosure requirement in the IFRS standard, and that was mostly in some of the older IFRS standards where the disclosure requirement was sort of embedded in the standard and was part of the discussion of the standard. But we tried to be helpful and flag those disclosure requirements by adding footnotes in the draft standard. So that is how we've structured the standard. Then some of the questions that we hear more frequently than others, the compliance statement. Now, this has been quite a big question this week, so it seems to be a new topic. So I think I explained this at the beginning. You have to make two statements, one compliance with IFRS and then another one compliance with the standard. Interaction with IFRS, one I've discussed, and we can go through some examples. Obviously, there's what happens about transition requirements. And then the final thing where we've heard some discussion on is about maintenance, because the IFRS for SME standards is only updated every 5 years, although it's been a bit longer than that this time. But what the board has done, and we did have an explicit discussion with the board, is to say in future, when it issues a draft IFRS standard or an amendment to an IFRS standard, which proposes new or amends existing disclosure requirements, it will publish consequential amendments to the draft standard, assuming the draft standard proceeds to a full IFRS standard. So just looking at the slide on transition. So if you applied IFRS standards in a previous period, but not the draft standard. So if last year you were applying full IFRS standards, the draft standard is now available, and you move to the draft standard, so you elect to apply the draft standard, there is no requirement to go back through IFRS 1, because in a previous year you have gone through IFRS 1 to go from your local GAAP to IFRS. So if you're going from IFRS to the reduced disclosure requirements, you don't go back through IFRS 1. In contrast, if you are coming from a local GAAP or the IFRS for SME standard, for instance, then you're moving to IFRS standards and you would be required to go through IFRS 1. So you would be in a period where you're transitioning to IFRS. And then comparative information. We've had some discussions from regulators on this subject this week about comparatives. So if in a previous period you applied IFRS standards but not the draft standard, this period you're electing to apply the draft standard, there should be less disclosures if the assumptions are right in the draft standard. In the year that you apply the draft standard for the first time, you're only required to give comparative information for those disclosures you're making this year. So you don't need to include disclosures that were included in last year's financial statements but are not required this year. And the exact opposite happens if you applied the draft standard in a previous year, but this year you're listing or you're no longer an eligible subsidiary, so you're moving to full IFRS standards. In that year, you have to give all of the disclosures that are required by IFRS standards for the comparative period. So for 2000 and X2, you apply IFRS standards, you give all of the disclosures that are required by IFRS standards, and you give the comparatives for the previous period. And then finally, we have the timeline. So I'm quite proud of this timeline, actually, because we started this project in 2019. We've issued the exposure draft just about, I think it was actually less than 2 years later. The exposure draft's out for comment at the moment, and we hope to go back to the board with the comment letter summary probably in Q2 of 2022, and then start redeliberations based upon the feedback that we get. So I think we have some questions on slide 25 regarding the structure and the content, the interaction with IFRS 1, and the use of comparative information.
Okay. Any questions? Or are we in the task force, Hernan? We have already concluded the discussion on this part of the project?
We separate the discussion in two parts. Those that we need to make judgment about the content of the proposal, and those part that we have to make a check of disclosure and analyze if all the disclosure that we need is ready or is included in the project. On this point, we didn't receive any comment dissenting with the point of the point of view of the project, but we didn't finish the work yet. We have our last meeting next week, and we have also time for receive any comments about this point, but at this moment we didn't receive dissenting point with this proposed approach.
Great. Okay. Anyone else who would like to add some comment? Elsa, please.
Yes, I will comment that in general terms, in Mexico, we agree with the proposal. We don't see any problem to adopt it. Thank you very much for your presentation.
Okay. Thank you, Elsa. So it appears that by this part of the transition requirements, we don't have at this moment significant concerns. Otherwise, the situation which in the previous period the subsidiary didn't publish financial statements in accordance with IFRS, so they will have an additional work to apply S1 in the transition, and then to use the draft statement if I got well. So it would be an additional exercise, but nothing that will be contrary to what we think. Right? Okay, so Tadeu, you can take the chair. Tadeu is there.
I believe we lost Tadeu.
Michelle, you have any other part to present? We cannot hear you, Michelle.
Well, that's a bit unfortunate. We lost Tadeu at this moment, but I would like to thank you again for your support, and obviously for the huge amount of work that you've done in looking at the proposals. And if you do have any questions, I know you're in regular contact with Tadeu, but you can also reach out to Hazira, Carlo, or myself. And we look very forward to receiving your comment letter and working with you in the future. So thank you very much for taking the time to meet with us today and to discuss the proposals. Thank you.
With Glass, we all thank you too we appreciate very much all those opportunities, Michelle. So it's a very, very important moment for us, and our working group will continue to discuss and to conclude, because on the 31st of January we have to send our comment letter to you, and so thank you.
Thank you.
Today. And I revert to Jorge. Jorge, if you want to tell something else. ¿Alguna cosa más para nosotros del directorio, Jorge?
Thank you, José Luis. I think that this has been an excellent meeting. We have found the presentation and the clarification very useful for us, for GLAS. Many thanks to Michelle, Hazira, Giancarlo, and Tadeu. And soon we will finish the work of the GLAS group, and we will be able to send you our comment letters. Thank you very much.
Thank you.
Thank you.
Thank you very much for your support.
Have a great weekend, you all.
Yeah, bon weekend.
Okay.
Bye.
Bye-bye.
Bye weekend. Bye-bye.
Bye.
Bye.